Welcome back. Time for the Word on Wall Street. Top investors watching your money. Joining me right now is Payne Capital Management President Ryan Payne and Markowski Investments President Chris Markowski. Great to see you guys this morning. Thank you so much for being here.
Pleasure.
Chris, kicking things off with you. Another firmer beginning to the day this morning. We're waiting on a whole host of more earnings for the third quarter, economic data as well. But this market has been on a little mini rally. What do you attribute this optimism to?
I just think the earnings are coming in a little bit better than expected. Netflix yesterday was fascinating to me. Obviously, the subscriber growth, but I also like the fact that they're getting away from that and they're just going to be focusing on their earnings. If you actually take a look at what they're up to and listen to the conference call, they're going to be pricing pretty high, $65 per 1,000 people, and they're actually doing a scarcity sale, limiting the amount that people can buy into to 20 million a year. So they're in a pretty good position right now.
And they still had subscriber growth, even though they're raising prices. But higher prices elsewhere is becoming a problem. I mean, I know you want to find companies that have pricing power, but what do you think about inflation cutting into profits so far? Are we not seeing that?
Well, there's going to be a limit. We talked about Tesla's coming out later on this afternoon, and even Elon Musk is saying, geez, hold on a second, the cost of my car is getting a little bit too high. But even still, you go to his website, I want a Model 3, it's going to come next June. So they still have some power.
You've been very bullish, obviously, Ryan, but when you look at the housing market, do you have any concern? Mortgage applications crossed the tape moments ago. Cheryl told us about the 30-year fix now at 6.94%. That's the highest since 2002. Mortgage demand is dropping to a 25-year low. We've got the building permits and housing starts coming out this morning in the next hour, but we already saw home builder sentiment tumbling to the lowest number since May of 2020. Isn't this an obvious reaction to higher rates, and doesn't this impact other areas this way as well?
Oh, huge, because now with rates so high, housing become more unaffordable than ever, and then meanwhile you're stuck to rent in a lot of cases, and that means rents are just going to stay high.
Well, you get sticker shock when you go to rent.
Oh, that's the problem. Rents are going to stay high and they're going to stay strong, and that's a big problem for Americans, right? As consumers who want to buy, want to live in places. I think that's going to be a big problem, coming into the midterms as well, because if housing affordability doesn't come down and the Fed doesn't pivot on interest rates, like that's huge if Americans can't, and if we keep undersupplying houses because housing starts to come down now, that means there's going to be less supply, and we're already undersupplied houses. This is going to be a problem for a long time, in my opinion.
Having said that, the other day, Jamie Dimon, when he reported earnings last week, said that the economic story is going to worsen. We're going to be in a recession in 6 months, and the stock market's going to sell off about 20% from here. You're on the other side of that trade.
Yeah, I totally disagree with that, because I think the reality of it is because housing is coming down so quickly, that's going to start to show up in those consumer price index numbers. And when that happens, the Fed eventually here, in my opinion, is going to have to blink. I've been saying it for months. I've been wrong for months, but I think at some point here that is going to happen, and wages just aren't going to come down. I mean, if you look at it right now, you're going to have something like 70 million baby boomers retired by 2030. We're going to have a housing shortage we're going to have an employment shortage for a very long time. So wages are going to stay strong. Prices are going to come down. In my opinion, that's going to actually make us have some sort of soft landing.
Well, I think you make a good point about labor, because you're seeing labor get stronger and stronger right here. I mean, look at the rail unions who rejected Biden's plan to give them a 24% increase in benefits and pay. They want sick leave, and they want more. And then you got strikers at Amazon in one area as well. So labor is getting stronger. That's definitely true. How are you invested right now, Chris?
I'm a long-term investor, probably the same way Ryan is, looking for high-quality companies over the long term, and everyone's situation being unique and different. That's how I handle it. Obviously, if you need your money over the next year, 2 years, you should obviously be a little bit more cautious. But long term, there's great entry points in so many companies right now that have come down.
Well, that's what I'm saying. I mean, should I wait to be getting into this market until we see what Jamie Dimon is expecting, another 20% sell-off? Am I going to be able to get better prices?
No, absolutely not. And I think it's the biggest mistake everyone's going to make. Let's wait for the economic data to get better, and that's what investors do. And meanwhile, markets are going to recover way faster than the economic data. And I think that's what you're seeing right now is you have too much money on the sidelines. Money managers right now have their highest levels of cash since 2000, when we had the tech bubble burst. They're all going to get caught their pants down. That's my prediction.
Wow. So you want to buy what now?
I think you have to diversify overseas, which is a bold statement. International is the cheapest it's ever been in my career versus the U.S.
What, Europe?
Europe, I'd buy Europe here. Everything bad is priced into Europe right now. We already know there's a war in Eastern Europe. We already know, gas prices and oil prices are obscenely high.
It's going to be a tough winter for Europeans.
Yeah.
It is, but that's priced into the markets already. So,
Okay.
buy the bad news, and then you get any positive here, you're going to big pop.
Europe still scares me a little bit. I'm reading stories out of Italy right now, and I happen to like the clothes and things that they make there. They're talking about the textile manufacturers and whatnot that are going to have a difficult time. They're talking about increases. Of story today, guy's paying 60,000 euros last year. He's paying 600,000 this year for his textile mill. How does he stay in business?
I read that piece in the Journal, and it's all because of the price of gas and heating homes and heating businesses. The price of energy is cutting into their ability to make money.
Well, it's the price of listening to Greta Thunberg as far as your energy policy is concerned. Not the best idea in the world.
All right, we will leave it there. Chris Markowski, great to see you. Come back soon. Ryan Payne, you're sticking with us all morning long. We're grateful. Thank you.